Greetings, market rebels. Welcome to this week's macro measure. I'm Wayne. My partner Ryan's working on our market outlook for the week, which will go out later today. It is Sunday, December 18th, a little bit in front of 2 p.m. here on the East Coast. And I was fortunate enough to catch that amazing World Cup final. And congrats to everyone. It was really one of the best matches I think I've ever seen, especially for a major final like that. So just amazing, amazing skill, etc. So what a great thing to catch. Anyway, here's our market disclaimer. I'm a little under the weather. I apologize for this video and the next one, which will be sector situation. And here's the trusty intellectual property rights notice. And let me stop sharing there and get the right stuff flashed up. So we have a pretty busy agenda here that I have planned, but hey, we're getting towards that situation where it's not that easy. And interestingly enough, we're going to start right here on my major sector grid. And I just wanted to note, we'll obviously go into this much more on sector situation, but really all the 12 main sectors that I keep on this grid that we chart every week, and we also include a few others, but they all really came under pressure. It became a risk-off event after Tuesday. I guess you could even say after the news hit Tuesday and they started selling into things, it became risk-off pretty much for most of the week at that afterwards. And that was pretty interesting because even sectors that had been doing well, which I think we noted, things like XLV and XLP, XLU, that something had to give, probably either the market or they were showing something. They were flashing defensively. We thought something had to give. Either they were getting, way too overbought, overowned, or the market would prove that, hey, it pays to be defensive. It seems like we're starting to prove it's hey to be defensive. So let's move this one out of the way. And I hope that the right stuff is in the right place, because we'll come back to some of this stuff. But I just wanted to briefly talk about getting us started. So here's what we've been flashing pretty much for the last few months in terms of the seasonality for midterms. And notice, right, again, that there's that middle of December sort of swoon. And this would theoretically, right, this would be just working out almost just perfectly. So we'll see, right, if the bulls have what it takes to muster the rally that in almost every case they managed to apparently do since 1946, under various circumstances that are all noted here, or factors or characteristics. But to back up for just 1 second, I think we came into last week thinking that let's go to the SPY for this. I think we came in thinking that the 100 needed to be held, that the pressure was on the bulls. They needed to hold because things had, I think I mentioned this on Cocktail Hour, not this Friday, but the Friday before that things did take a technical turn for the worse, in my opinion. They did hold SPY and bounce again from that 100, 150 SMA confluence zone area in white and then rust color that I'm mousing over. And you all know what happened there. We got that big burst through the upper resistance line that we've been charting for some time. Let's just give some perspective on that if you're new to watching the video. But there's the upper resistance line in this really kind of broadening formation, expanding channel, whatever you like to call it, that made its way through. But again, notice how it didn't hold. Obviously, it got really sent packing for the rest of the day. And interestingly, right, if we look at, say, RSI, and I think we were noting this, that some RSI readings were diverging. So a lot of the stuff that I think we have been hitting on may have been helpful, which is good because you can never really nail everything. The idea was, right, see what they're able to do early in the week if they hold it, see what happens with Powell. And Powell clearly took away I typed it in Rebel Pit chat. I thought he took away the punch bowl, and he basically threw cold water on everyone that was still at the party, and then basically left them with a little bit of instant coffee to make for themselves to sober up. It really was not a good scene for bulls arguing that the Fed was close to peaking. And so naturally, right, this is what we got after that. And we said, if this doesn't hold, expect more. And certainly we got even more quicker. And this is what happens. This is why I rarely feel like I nail it. Everyone seems to want super confident predictions, but even when you kind of have a good sense of what you think may happen, it happens maybe more quickly and more, let's say, authoritatively or vociferously. Certainly, right, a failed breakout was a good thing to look at there. Far lower RSI readings by the end of the day, even though you technically, I think, had a higher high technically. Struggling at the line we'd expect it to struggle at. And one other nice thing to maybe worth noting for some would be that if you go back and look, it really wasn't easy for, this is my RSI. Let me try to get a little bit better. Maybe this other view will do this. No, it's not on that one. My apologies. I thought I had it on there too. But you'll notice that the RSI really struggled on this top here against this level here. Let me just try to boost that up. This all corresponds to other things that we'll check on too. But once we've gotten close to this resistance channel, the upper side, there's been a struggle to really get much further than, say, the mid 50s on RSI this year on the weekly basis. So just another thing you may want to check on to, when you start to see the weekly maybe get up into the 60s, that could be something to keep your eye on, is maybe it's a little bit different this time in terms of maybe this rally has a little bit more to run rather than just petering out or stalling out, really just about where we'd expect them to. So let's do a little bit more work on the browser, if I can get that going again, which is right here. So what I wanted to show was that this is what we've been checking pretty consistently. And if we look at this, here's the percentage of stocks above the 50-day. It still has a ways to go before it gets down to some of the lower levels. Remember that one of the last times we really rallied strongly was in mid-October. And so we could still fall along. This is very interesting because we could still fall a long way before we get that, let's say, wrecked. One of my favorite little words that they're overusing and misspelling again these days, but that's modern life. But here's your percentage of stocks above the 20, still has room to fall, right, to get to that sort of late sep, then into mid-oct, just a little bit to mid-oct, but late sep for sure. But this is probably the most telling one, which is the 200 MMTH. And you can see that this one down here in mid-oct, let's say 13th area, that was a pretty interesting low and reversal. That still obviously has a long way to go. So on the one hand, when we look at the SPY right now as our proxy for the market, this really doesn't look good in so many ways. And I still think the market took another turn technically for the worse. And I think the pressure's on the bulls. And I'm thinking they might even need some sort of news. I don't know if that's some sort of, Ryan mentioned it. Maybe it's a ceasefire between Russia and Ukraine, and they do some euphoric thing and start to squeeze on that. I don't know what it would be, but it's a little concerning that this almost looks too easy at this point, because we've been waiting for failures once we've gotten up here, saying, let's see how it acts. And then if it reverses below support, and I'll keep clicking on support lines. Remember, this is weekly, so there's it's a lot more noisy when you go down to the daily. But once you've fallen, it's probably better to look at it honestly on the daily. But once you see it, you'll see right away that, right, you fall through support after trying to rally, you're in big trouble. You fall through support and you're in big trouble. Again, you fall through support, you fall through this support here. I'll make blue if I can. There you go. You're in big trouble again. And then finally, now we're falling through support on this particular ascent, right? And that's had us concerned and so on and so forth for a couple of weeks at this point. Just using simple approaches. This is why it's interesting, though, because they did bring this back, close this gap. I do think this is the toughest call of the week, is do you come back and at least close this gap, get back towards the 100, 150, and then tap those from the underside and see if you can reclaim them. But notice how now there's no argument that the 10 in white, the red in 15, and the 20 in light blue are all rolling over. They all have a negative slope at this point, as does, of course, the 200-day there in purple. So there's a lot of negative stuff happening in SMA land. Interestingly, though, and I'll try to, let me see if I can do this in some elegant way, which I don't think I'll be able to, but maybe it'll be better than other even less elegant stuff. But I'm going to try to do a ellipse here, kind of show you like the compound head, and there would be like one hump, right? Just to kind of show you where that would be, but by drawing that. And I'm just going to then jump over to this side and say, did we just see that kind of situation right there where I just put that one? And you can, I think the rest of you can see that there maybe is that inverted compound head and shoulders. And did we just get to the neckline? Did we fail? And we did say, right, that the interesting thing about patterns, and the mighty BMC, Brian McCormick, Market Rebellion's own Brian McCormick, he's also a big pattern player. And he'll be the first person to tell you, you got to keep your eyes on these things, as elementary, maybe obvious and longstanding as they are. But I think the issue for a lot of people is they want to take that pattern theory as gospel, and it just isn't. It's in my opinion anyway, it's more like get prepared for this possibility. And then if it starts to embark on some sort of price behavior that you expected, get in for the ride as long as it makes sense and the momentum's sustained, but at least you know that there's really big potential. So with an inverted head and shoulders, like I think in here, that's compound, or at least something akin to that. And then this failure over here, again, failing to hold above critical resistance, these things rolling over. I mean, the pressure's clearly, in my mind, on the bulls. I mean, they're in trouble. I just don't know if this little attempt here is the final failure, or you need to still get another one. Because if you notice, when they jam things up here and we got that kind of big, quick pop to the upside, it just broke and then just really pretty much kept going. And that's the big question for me, is do they try to put a little something together? So I mentioned that sort of in the Rebel Pit. I mentioned that, and I kind of like around 11 o'clock-ish, I think, on Friday, or 10:40-ish or something, somewhere like that. And there was just a lot of oversold on the intraday timeframes I like to keep an eye on. A lot of the RSI readings were really beaten up, and then they put that kind of lame little save move together about an hour after we talked about that. And now this is where you are. So clearly, right, you got to get above the 50 to even think about closing the gap, and then you got to get to the gap before you even think about getting back to the 150 100 confluence zone, which is just barely above that 390-ish level. I didn't put an exact level. I just kind of said 390 being a big deal, and then 380 to 50, then 380 we talked about. And it seems like it's respecting how we're looking at things to a great extent, I think. And in terms of the volume, right, this is pretty ugly. I mean, there you go. There's folks just cashing out. So I've heard that there's a lot of people that are still chasing this market. I don't know about that anymore. I kind of feel like that chase happened. And now there's about 2 weeks to go. Maybe if they get a squeeze started and they can somehow on news turn this around and get it going, maybe they could ignite another squeeze to the upside, and end of year short covering, maybe propelled or powered rally, maybe. But I think there's major pressure on the bulls. All those sectors we saw went to risk off, which I think is a big deal. The selling became, I think, fairly real, which is a big deal. The technicals worsened across the board. Again, to me, another kind of big deal. Not that this is a big deal, but it just helps to have it in your favor when a lot of your market breadth measures continue to deteriorate, right? I mean, if you're a bear or you're trading on the bear side at that point, right, you want to see deterioration. I don't want to see healthy stuff and me like trying to pick up a few last dimes or whatnot in front of the steamroller. I want things to keep getting worse because I know that selling begets selling. But this green line, which I'll go back to on the other SPY chart, I added this in just to give you an idea coming back to here, because we're not done with this. And I know this is jumping all over, but there's a lot of interest. I think there's a lot of interesting things occurring right now. So this is interesting that you have a lot further to go on the 200. Like we said, note that if we put that, that's the kind of low right there, that kind of failure swing back down where it couldn't take these lows out and put in this higher low. Not that I'm really charting it exactly that way, but just to get you the idea, that was the 13th of Oct when the 200 got that beat down. And if we come back to the chart of the SPY, I think I put this green line on the 17th. So, just a few days removed from there, the real low happened. And I was kind of ballparking and I guessed wrong, but the real low happened on the 13th. So there you have it. If we move it to there, well, is it letting me move it? I thought it was, or maybe it isn't. Okay, one more time. All right, I guess I have to change the date manually, which I'll do, but just kind of strange that it's giving me such a hard time that way. I thought you could slide that over. Well, there you go. I mean, that's kind of the proof is in the pudding a little bit, right? That it's on the same day. And so you get this big reversal there. You were going lower, then they reversed it, and then you get this out of it. So there's a lot more room to go. Now the MMTW, that is already kind of getting down there, like we noted. And MMFI is, of course, he's being more responsive. It was quicker for those moving averages to pop higher, which means it's easier for a lot of them to fall below that now. But this is nowhere near, even though it's coming down, nowhere near the October 13th. So on the one hand, right, there's a lot of stuff, I think, suggesting that we go lower, which is why my theme of the week is the pressure is really on the bulls. Like, this is their time to seasonally shine, as we've seen. We've been looking at this for weeks. I guess you've got to be, if you're a trader that's able to sit there in front of the market all day, which I hope you are. The way it's been, it's not easy to sit there and wait for days and days in this topsy-turvy market. But if you can, you just need to be on guard and just be ready for some kind of a news story. They managed to get news there in the pipeline, even when it's kind of bogus, but it can change fortunes. Other than that, I think without news, this thing looks like it's in big trouble. And I just wanted to note how, and some of these are kind of frustrating because I wanted to get some more of these trades in UA Pro. But I was putting other trades in while some other things hit and couldn't get them all in. It's just the way sometimes they just get so far away, you can't even address them as a new idea by the time you're finishing, just if in kind of like fast market, early morning conditions sometimes. But you could just see that the mostly, right, you're getting labeled bearish there in red in the main things. But I just want to note for the record that whenever I've seen this type of call activity, these far out of the money calls and even nearby ones, but that are relatively in the short run, we've been treating those as bearish opportunities as well as bullish opportunities all year long because of our technical take, our major macro technical take, combined with all the stuff that appears in Market Outlook and everything we discussed in the webinars. We just have had more of a bearish lean, if you will. We're willing to, of course, trade when the momentum shifts for sure, but we've tried to keep vertical put spreads and things like that in the service and in services all year long for that reason, because and we have been using really out of the money calls. Whenever we saw those earlier in the year, we noticed that they really looked like a hedge to us and they acted like a hedge. And assuming the money is smart and they sold shares against those calls they bought, they killed it. So we, of course, noticed that pretty quickly, fortunately, and we've been sticking with that. So we'll often put a bullish and bearish idea in there together, even if it is just a call buy. Jumping over to this tab right here, just wanted to show that this is where we are for the next meeting, right, in February. So you're about 45-ish, 40 something days away, I guess, from that. And they've already got a little bit of, I guess a little bit of an increase here, maybe a 50 basis point increase is the main outcome. And then they've got this one here as the secondary outcome, right, which would be a little bit higher. So right now, it's not like the marketplace itself thinks that the Fed is done. just to let everyone know. Let's jump out to the next one after that, and that starts to level off a little bit more. Some, of course, still think we work our way up towards near 5 with the target rate, but just to kind of show you where things are. So I think, I mean, again, I don't think it helps you a lot to get frustrated by how the market got ahead of itself with this Fed pause, so-called Santa pause rally, Fed pause rally. That's the stuff that gets sold to people. In my experience, in every bear market that I've been trading through, right? And that's gone on since '92. For me, every market I've traded through, they've always got some kind of a story they're trying to spin that is optimistic. And once the market does achieve some critical levels, like 50% retracement here, we've noted that in the SPY on the whole move up from the COVID low to the high that was put in. When you retrace that much, or you've just gotten so battered, then they'll start to float things like that. And the bulls are just so eager to lap that stuff up that they do. A lot of them do, and they'll sit there and just bandy it about. And it may make absolutely no sense, which, I don't think it did make a lot of sense, but it doesn't matter, right? If you want to profit from this opportunity, you've got to just really notice that the technicals are shifting. So as always, I think on one hand, there's a lot more to go here. I don't think that this is anything good really happened here in these major index ETFs. And I'll just kind of cycle through them, but all of them took a pretty bad turn. And I'll even cycle through some stocks. Like there's the Qs losing the 50, which is the last of them, 50 being gold right there. So that's, I don't think you want to see that. This gap is yet to be closed, I believe, down here too. So that just doesn't look good. And I think we noted that a lot of those big stocks, which we'll go back to again, a lot of the big name stocks and high market cap stocks started taking a turn for the worse. And that to me continued again this week. I think that again proves why it's worth going the extra mile to look at things like that when it may matter, just to know, like, hey, if this is really setting up for some bad stuff. Of course, you had to live through the CPI, but we all knew Tuesday CPI, Wednesday Powell, FOMC. That's the big stuff that you've got to prep for. This is where they play their games, and then they got a lot of people to play that game there for a day and a half before things really got rocked. But there's your IWM. That's broken below the 50, and all SMAs all over again. It's got a lower high put in. It's got a lower low put in. They did try to do a little resurrection there late, but overall, I mean, I just don't think you can be all that happy about that. And then we'll take a look at the diamonds just to be thorough. But this one's been the standout. And as we often note, usually right when they stop something, it's near a key fib, a flat line, a support line, or an SMA. And in this case, it was the 50, right? It got a hair above the 50 SMA, and they bounced it from there. And that's the big question for me. The big question is, are they able to put a little something together to make it look like that rally that seasonality says should be upon us? They make it look like that's getting started, come up here to the 20 or so in this case, and then again, most likely fail, roll over, test this, and maybe go even lower. Or, right, does news possibly let them run with the ball longer than that? But regardless, right, I would just say the message I really care to share is that I think things, again, for the second week in a row, took a technical turn for the worse. And us looking at things that way, I think maybe could have helped out last week. Now, here's the dollar, and you can see the 20 there in blue, light blue. I think if the dollar can get above there, and I've got a little label, let's just call it, the DXY at 106 above there, that could help that start moving back up a little bit technically. And you can see there's a little bit of lower low that the dollar put in, but it's very similar on the RSI reading, very similar. So slightly lower low than here. So not really a positive divergence, but really a little bit of a hopeful sign. And again, I think if that thing can break out a little bit, that'll tell you that, hey, probably dollar moving up, not good for US stocks, hasn't been generally very good for US stocks this year. Here's the 10-year yield that we chart. This one too, it's starting to try to percolate. I mean, you can see how roughed up it's been. So it wouldn't be crazy to put a little something together, a little bit of a relief rally. But again, I'd keep your eye on the 20, or maybe even that high there on 12.12 of 35.21. Gets through there on a closing basis, then maybe it does a little bit of damage. But remember, both of these would be counter to the intermediate term trend that we've seen over the last month and a half. And then finally, we'll take a look at the VIX. There's been a big question really all year, like what's wrong with the VIX? Why isn't it responding? And I don't have a great answer. We've got some questions from, I think, maybe Don and a few other, maybe Michael. There were a few people asking questions about that in Rebel Pit. And, I don't have a great answer. I wish I had the time to look into what is going on in here, that even as all sectors turned down, even as Powell, again, took away the punch bowl, threw cold water on the remaining guests, and only left a little bit of, instant coffee for them to brew themselves. Even after all that, they still had the VIX really mired towards the lower end of its recent range. So I don't know. I mean, I get that the VIX should get beat up a little bit in front of these two long holiday weekends that are coming up. I get that, but I'm just a little surprised that it can't do more. Maybe people are shifting to some of the other volatility products for all I know. But what I wanted to do now is note that, let's see if I can get the right setup. Where is that? Is that over here? Is that where I had that? No. Okay. I wanted to get where were we on? Oh, there we are. Yep, this is it. So I'm going to pull up these, and this was, I think, helpful to us. We don't have to spend a ton of time, but I'm just going to go through the top 11 US companies by market cap on this simple chart view that we have here. And, I just don't think many people would be making the argument that Apple looks great right now. The best thing I could say about Apple is that the RSI in Apple is down towards 35. But that Apple triangle we looked at and noted, that had, again, very much like the market, just shows you how important it is, right, to keep an eye on Apple. False breakout of the triangle and then break to the downside. So very interesting development there. I think Apple and Tesla have a lot more downside than I think a lot of people would believe. And I've only felt this way about big stocks that everyone seems to love a few times in my career. I would say in 2001, maybe that general vicinity. 2008 would be another one. But I think that Apple could really fall a lot further than a lot of people think it could. So we'll see what happens on that over the course of time. I'm not cheering for that to happen. I don't happen to own any Apple puts or anything like that. But the best thing about Apple right now, triple bottom-ish down here, getting oversold. And of course, it'd be a lot easier to levitate the market and put a little window dressing on this thing, on the market, if they can get Apple to flow back up. So it's always got that going for it as such an widely owned name. It's pretty much owned by probably mostly everyone, it seems. Microsoft, which was acting better, I think you have to say like, oh boy, there's that support line we've had in place, I think, for a week or so. Well, I think I had that on there, and you can just see that broke down heavy. There was a big expiration possibly that drove this, but there's your second biggest market cap breaking down. That doesn't look good. It got right to the 200 there in purple, stopped in its tracks, and promptly lost the support of the 150, the 100, the 10, 15, and 20. Now only the 50 in gold remains, and you can see that there's gaps even below that. So that doesn't look good. Right? This is what we did a little bit of, I think, last week. We've done it before, but we started doing this last week. Here's Google. I mean, here's another big weight, the third largest weight. It's maybe closed its gap, maybe. Regardless, that just does not look good, right? There's nothing there that's telling me that momentum is shifting and, hey, we're about to start moving up at this point. It could start on Monday, of course, could start tomorrow, But if you look at that chart right now in the static air of Sunday, that doesn't look good. It really does not look good. I mean, it's making a new recent low, and the whole market basically has a bad complexion. So it's acting as you'd expect most stocks to act in a poorly acting market. Here's Amazon, another one that's just barely above lows. It's almost like this one is almost retesting the low already. And if that gives out, right, we've had this this pattern on so many names this year. But where are we? Let me get a little more data in here. But you can see, this thing's far from perfectly drawn. Like my SPY chart is a little more proper, but you get the general idea that there's a broadening formation potentially. And anywhere down here, there'd be other support criteria we'd look at. But I mean, there's a lot of room to go in this one as well. If it breaks here, you may have another Bollinger Band excursion down in the mid 70s, which I think a lot of people, when we were back here, would have a really hard time believing. What do you mean, that this thing's going to lose $100 per or more per share? But it just doesn't look good. The cycles, right, that I look at, where I try to look and see who's got the stronger hand, the bulls or the bears, that's mostly in bear control. And with more weakness, it'll only get into further a deeper grip, more of a vice grip for bears. So that's what I mean. The pressure is really on the bulls here. Here's Berkshire. For everyone, again, that was wondering why do these guys use simple moving averages? It's because, right, the day before that, it tried to close and hold above there. The next day, it trades down to just about near the 50. So is this stuff sort of silly? Yeah, but some of these things are so widely followed and people react near them and around them that I think you've got to keep them on your charts for that reason, even if you think it's like, what is that? Why even do that? But I think it's because so many people use them. You're not seeing what so many see, maybe even ones that make bad decisions consistently, but you're not seeing what so many people see. And I think you need to do that. It doesn't take any time. Just to give you an idea, but you can see where that stopped. It doesn't look good. Berkshire did not look good. We talked about it last week. It started rolling over. Here's UNH, another big name that stopped right near the 200 in purple and turned around, right? But that also wasn't looking good, and it looked somewhat vulnerable. And after that Tuesday action, and there you go, right? It got caught up in it. Tesla has been not acting well and has been looking poor overall, right? There's a downtrend that you can see in here, and this thing just keeps failing whenever it gets up to either resistance there in blue or near these SMAs, right? It just continues to fail to hold them or get above them and hold for long. And it just even made a new low. Now, the only thing, again, one of the only good things I could say is that Tesla's getting oversold. So it's starting to get there. It's not quite there yet. Maybe a final plunge, and then there's a little bit of a relief rally. That really wouldn't shock me at this point. But I also think Tesla has a lot more potential to the downside, I think, than a lot of people would believe. So I won't even go into it because it's not worth it. It's kind of like more of a groupie mindset. People get very attached to their stocks sometimes, and I get that. But I think you just have to try to be as objective as you can. Here's another one, J&J, that's a big name, and you can see the SMAs are all near rollover action. They're really close to doing that. You lost the 20 on Friday in a big way in light blue, and these are your bigger SMAs down here, and it almost seems like that would be due to visit those right in with more poor market action. But again, probably worth noting how much of this stuff that we saw on Friday was some sort of expiration related activity. That's why it's become so hard to try to make a prediction too about a Monday. You don't even know if what you saw on Friday is really bankable or it was really a product of options in the options expiration influencing the price action overly influencing it, which it makes it hard to nail where it really should be. But here's your Visa. We looked at this one, and we looked at Exxon, and we looked at NVIDIA. This had the big pop, and they crushed that. After that, they brought that right back down near the 200. right? So that's that. We'll take a look at Exxon, and then we'll take a look at NVIDIA or NVIDIA or whatever it's called. But John and Pete were even making jokes about that. Here's XOM, and I think some news broke that helped oil late, but it was having another week where they tried to rally it and it got sent packing. So you got to look at, I think you may as well look at that, just call it the 102 level. Breaks down below there. Maybe that's the start of something more, but otherwise, right, it held there, has a better RSI reading, some better other indicators are liking this low if it holds more than they did this one. So we'll maybe give it the benefit of the doubt, but that certainly doesn't look good. I mean, it certainly looks like at least part of a retracement. It would make sense, right, to stop about where it is right now, because that's where these highs were. Just a little bit. This one was very close on that day on 10-7. The other ones were just a little bit below there. And then once it broke through there and closed above it, it did back off small, maybe just to test it out intraday, and then just went. So that would be, right, a good technical area to stop and try to double bottom from. Maybe we'll see. A lot of people are thinking there should be more of an energy rally. I don't want to be remiss. We typically do this in the sector situation, but let's take a look at crude oil. And we've been noting that there's been a real discrepancy, right, between the energy stocks, XLE and crude. Crude did not finish, you can see, did not finish all that well. That again hit the 20 SMA in light blue and rolled over. So that'll be interesting, right? Does it start taking out the low, challenge these lows, or does it manage to put in a higher low and then start to work its way back up again, which a lot of people apparently think it should, but it's been beaten down. That gap between the stocks and the oil futures continues to persist. It's closed a little bit, but it's still relatively large. And then finally, NVIDIA. This one is interesting because this one had a really tremendous pop, then sold off. So it tried to hold the 200 there in purple, and you could see it kind of had resistance there, popped through it pretty strongly, but ultimately it couldn't do that, and it worked its way down to the 20 in blue and light blue. And I think this is showing again more. You'd probably have to add this in now. We probably, because our first support line got taken care of, but you probably have to give it a little bit more wiggle room. And then if it gets, let's say, oh, it switched me over to percentages. I didn't realize that. If you start falling, we'll have to make a call on that. We'll call it below one. Let's call it 161 just to be safe. Unfortunately, you've got the 150 in rust, then the 100, then the 50. But remember, if we're in market meltdown and we're in risk off, like it seems like we started to work our way into, then these kind of bigger moves can happen, right? When they're just selling everything. I think that narrative, it got hit pretty hard with Powell's comments that, hey, they might be peaking rates sooner and so on. That seems to really have taken a hit. But if you look at those stocks, again, not predicting they all start going down at 9:30 Eastern time on Monday morning, but I'm just saying that technically of those big 11 that we just looked at, I think they all look like they're under more stress or pressure than they are acting bullishly at the moment. So when you have all those heavyweights acting that way, and just to recap, and you've got all your sectors, which I'll pull back over to this recording screen, and you have all these things breaking down, it's becoming risk off. That to me, you're looking at the pressure just clearly being on the bulls. It's their time to shine. We saw that on seasonality, but if they don't they don't step in, right, the damage could be picking up, and there's a lot of heavy lifting they've got to do because so many of the big picture stocks are struggling at the moment. They just don't look very good, in my opinion, complexion wise on the charts. So with all that in mind, I think it's the seasonality issue that we've been, that's I think done a fairly good job, right, to kind of track that and say, what's up with that seasonality? How has it been constructive to look at it? I think it has, but it's really going to come under pressure now. It's right when the bulls should take over and do their thing, but I'd say they've more than got their work cut out for them with how the technicals look right now. So if it came down to it, I would say without some sort of news development, I don't think they'll be able to do it. I think the market continues to stay under pressure. Will they bounce this thing up first before letting it go? I just don't know. That's the thing. I tried to come up with something for that to say, do they come close a little gap, bring it back up using the SPYs as a proxy for the market as we normally do? Does it come back up here, fail again, and then roll back over for another? I mean, it wouldn't be the worst thing, right? It wouldn't be I'm kind of like 50-50 on that. And that's why I'm not really willing to give such a strong opinion, because I looked at it and I just can't come up with a strong view. Just to give you an idea, this is the hourly chart, got outside of the Bollinger's not once, but twice. Usually that's a good thing. And then starting to work your way back in from oversold conditions where your RSI was at 23 midday. And that's what I was noting for Rebel Pit, that I started seeing things like the hourly and the 2 hour getting to these lower RSI reading levels. And not that it's a lock that you rally, but usually they find a way to do something to take some of the pressure off. And see, there's a little before I made that made that comment in Rebel Pit, or maybe Rebel Pit, the Rebel Pit webinar, you could see the RSI reading down here was approaching mid 20s. So that's pretty low. And this is not, clearly, right, this is not a 1 minute chart. It's not super noisy stuff that you should overreact to. And they managed to do their thing. So the bulls kind of finished barely in control of matters to close that out. Don't know if it was expiration related, but I think it's 50-50 as to whether or not they start working things back up first before they fall, or they just keep going. I really don't have anything that I uncovered that gives me a good lean. I could make the argument on both sides with about equal amount of supporting points. So that's the reason why I'm where I'm at. I think overall, if you don't see a news story that you think is credible, that really can justify, not that the market should go up, but just that that they could create a short squeeze from it, then, and the trend's still down, I would just stay with that trend, because I think this thing is, it looks bleak, right? It looks bleak at this moment in time. And so I'd stick with that until you see some signs that it's changing, or that you get that kind of a deeply oversold reading on some of your heavy duty intraday charts, like the 2 hour, for example, where you get down to 27 on your RSI. And that's what I noted there. This is how I'll still trying to work on a course for this. That's for some of the people that attended the live events. But this is when I get to this point and I'm riding puts, this is when I'm going to definitely trim, roll, or both, right? Because I know, not that this whole move is definitely over, but it's rare that you have a big swing from near 410 all the way down to nearly 380. So that's 30 points, right? What's that come out to? About 7%. So it's rare that you get a 7% drop, get to oversold on the, say, 2 hour and 4 hour, 1 hour, whatever, and then you don't do anything at all and you just keep going. Now, it could happen if there was incredibly awful news hitting the market. That's a different story. But aside from that fresh news that's driving things down, I would say, look, there may be a whole nother leg, but they are going to try, if they can, to try to work this back up if possible. So I would say, if there's no news, that doesn't happen, probably. But if there is news, they'll try to work it back up and then see how it reacts from there. Overall, the big message is that the seasonality is upon us, and the bulls have their work cut out for them if they're going to try to make that seasonality become a real thing here at the end of 2022. So I hope something I've shared with you can help you out this week or in the future. I'll be taking care of sector situation soon, struggling with my voice again. So I want to say to everyone, have a great, safe week. And if you take the week off, have a great holiday, whatever holiday you celebrate or holidays you celebrate. And then same thing for Happy New Year for everyone. If you kind of get away from things, which After this year, it's been a good trading year if you're willing to go with the market, but it's probably not been an easy year. You've had to be nimble and disciplined to do well, but I think it's still been chock full of opportunity for those that are willing to be nimble and disciplined. And hopefully we'll get out of this phase sometime next year. We'll get back to a nice, strong bull market rally where it's a nice, strong movement that's a lot easier to manage from day to day. So take care, and I'll talk with you soon.